not looking at larger time frames? No, you can if you want to, but I'm usually going to be in a trade on an average of 2 to 10 trading days. So I'm looking to see what they're doing on a daily basis. Now, if I was trading a little bit longer term, where I wanted my positions on for maybe 2 or 3 weeks or longer, yeah, and then I'll start looking at the longer term charts. Guy, if you see a sell signal, everything's high. All right. Does it need to break the prior high to be officially be called a breakout? Probably. I think so. Can you see my cursor? All right. Gary, can you see it all right? Lewis, yes, there is a way to see which sector is working the best. It was for the previous chart. I don't remember. What was the previous chart? Netflix. Yes. Usually want to see it break out through what you can see what everybody else is looking at as being a potential resistance level. That's your breakout. If this is your J-hook pattern, you can either be buying, anticipating it's going to break out, or more conservatively, you wait for it to break out. So whenever you look at a pattern, there's two things that are going to happen. Either it's going to set up for the breakout, or you take it after the breakout. Obviously, your profitability will be a little bit less. Oh, you still don't see the cursor. Yes, everybody else seems to be seeing it, Gary. Let's see. Scroll back down. Gary, you might just have to log off and log right back on if for some reason you can't see it. Okay, so the reason that we want to be looking at for patterns is there's two major advantages. One, it puts you in a situation where the probabilities of being in the right direction at the right time is much greater in your favor. And two, the magnitude of the move is usually going to be much stronger than just merely a uptrending stock. So here's a J-hook pattern setting up. If you're buying this one, you've got an assumption. Assumption being if this is wave 1, wave 3 is going to be that same magnitude. So not only do you have a high degree of probability of what direction it's going, but what the degree of return you're going to get. So here's another setup. This is Dillard's. Now, here's back to your question. Let's see. Okay, Gary, good. Oh, I forget what the question was. Oh, whether you can find the sectors that are working. Right now, if you went through the stocks that were doing the best, you're going to run into the retailers all doing well. This is Bison. It backed off a little bit today, but it looks like it's setting up for a J-hook. Macy's, setting up for a J-hook. There was one more. Oh, Ross Stores. So if you're going through your charts and you're starting to see patterns setting up all in one industry, obviously that industry is being bought. And now what we want to do in that industry is find out which ones are the best. So yes, on quite a few of the services, there are, for example, on TC2000, you can scan the different sectors. And if you find a good pattern set up in a sector, then you can turn right around and flip to what the makeup of that sector is, which stocks are in it. So that way, you've got you can see which ones of those stocks are acting the best. Yeah, hang on to your individual ones. I'll get to a lot of them. Okay, and so again, this is all kind of a prelude to what we're going to be looking at this weekend. Essentially, we're looking for, well, this looks more like there's your slow curve J-hook pattern on GHTX. Now, it backed off a little bit today, but remember what our simple rule of a fry pan bottom is. You can stay long once that fry pan bottom is forming, as long as it stays above the T-line. Kind of slow curve. AQ, we recommended this one a couple of days ago when it broke through the 50, coming out of this fry pan bottom. And notice what this is important to visually recognize what's happening. Notice where this backed off, right to the 50. Remember what happens when they break through a resistance level? They'll come back and test it. Now, is this a reversal? We'll have to wait and see. If it stays above the 50, it tells you still want to be buying because it's telling you they're supporting at the 50. The light green line is the 3 EMA, the 3 exponential moving average. And that's used simply that the further away you move from the T-line, the more effective the 3 T-line becomes. Drill down, we'll compare sectors to indexes. Yeah, but we're not so much interested in the comparison. We're more interested in seeing, even if the market's backing off, which stocks are acting the best, or which sectors are acting the best, no matter what direction the market's going. We've been in our NDT from a recommendation a while ago because of this fry pan bottom. And notice the nature of this fry pan bottom. Doji hammer, doji hammer, doji hammer, doji hammer. What was that telling you? Every time they tried to knock it down, the bulls stepped in. So just the visual of this fry pan bottom tells you the bulls are stepping in at these levels, getting ready for your next move to the upside. ELTH, Duluth, underwear, I guess it's the one where they tell you to get a pair. There's your fry pan bottom breakout. And notice what this has been doing when the market has been heading down. The results of your fry pan bottom is a buildup of investor sentiment for some reason. We may not know what the reason is, but we don't have to. All we have to do is recognize that people are buying. Oh, for some reason there was something more definitive on Micron, and I don't know what it was, so I'll go right on to the next one. Oh, does the shooting stars scare you? Well, yes. Remember, we were buying based upon the fry pan bottom breakout. Now we go to our other analysis. What was that, on Duluth? So if you're long Duluth, what are the two things that should be warning you? one, you've had a doji in the overbought area, and two, look how far away you are from the T line. So what's your simple strategy at this point? Put a sell stop just below the low of today. If they come back down through there, where do you think they're heading to? Right back to the T line. So we're recognizing the strong price move based upon this pattern. Then once you get the strong price move, you throw your other analysis in, which is your signals and where you are as far as stochastics, and how far away are you from the T line. Little slow curve breakout, telling you this next move was going to have a slingshot effect when it broke out. That was on CERS. So the reason I'm showing these is all these patterns. You can see what's happening. There's our kind of slow fry pan bottom J hook. Notice what this stock did today. It traded up in a very crappy market. So the one thing you should always, or you should recognize, is that a signal and or a candlestick pattern are going to provide much stronger probabilities, even though the markets might not be going in the same direction as what we're trading. So NCMI, we can see what started this one, the kicker signal. Then we had that slow curve breakout. Then we had another kicker type signal. And where are we trading in this one? Not only are we above the T line, but we're still above the 3T line. You got some sell signals up here, so where's a logical place to put a stop? Right, just below the low of this doji. If they can sell it back through there, they're bringing it back down. So everything that you can, or you should be doing based upon when to buy and when to sell is based upon pure logic developed by candlesticks. When will the sellers take control? When is a sell signal being confirmed? This is Cato. There's our 45 degree. Notice what it's done right here on the T line. You can see the slow curve, and we're right at a breakout level. So what happens tomorrow if they open this positive? This resistance level is not acting as a resistance. And that's going to be a function of not seeing the market opening up down another 150 points. You just watch to see what happens when it goes through that level. IDT, that's more of a 45 degree. That's in the wrong spot. Oh, that's your best friend. That's what it was from. Your best friend signal, the doji gap up. Then that creates that 45 degree. So what we're going to be doing this weekend is pointing out and quantifying about 14 or 15 different patterns that work much more effectively, work most effectively. And the whole point of it is not so that you learn all 14 or 15 patterns, but you take a few that you can really recognize and just become a master at those. I could take probably 3 of all the patterns: the best friend signal, the fry pan bottom breakout, the J hook. I could take those 3 and I'd probably have more trades than I'd ever be able to handle. So we can see what happened here on the J hook best friend breakout. MRTX, we recommended a while ago, just after this best friend signal. Where did I just get that? Oh, we recommended, or didn't recommend it, but I mentioned it in the chat room yesterday, that here's another best friend breakout. Didn't do very well today. But what should the assumption be? We've had a best friend breakout. Today they backed off, so we know what our game plan should be. It better open positive and trade positive. If it starts trading back below this level, you close it out because it's not working right now. You just have to wait for the next buy signal. A Iridium, we were in this one for a while. Again, there's your gap up, breakout. And when did we start getting out of it? Over the last couple of days, because where do you think it was heading back to? The T-line. And once it got here, if you stayed in it, what was the criteria for staying in it? It had to open positive and trade positive. This becomes a very simple exit strategy that if that's what you're waiting for, to open positive and trade positive, put your stop at the close. Because if it trades up and then comes back down through that level, that means the sellers are in control. Oh, we should be holding off. Alta, it's kind of setting up as a not really J-hook pattern. Remember, a J-hook pattern has the prerequisite of a strong price move. Then your J-hook. This is just moving sideways and now maybe being bought as it hit the 50-day moving average. Let's see. I've scribbled so much on this pad that here's another fry pan bottom breakout starting that very strong price move. When do you sell? When you see a sell signal and a close back below the T-line. Now, a lot of people will say, well, shoot, I gave up some profits. The idea would be if we can buy here and sell here, even though it's not at the top, the more correct trades you have, where you get the fat part, the higher your compounding effect's going to be. And your probabilities are going to be that much greater of being in correct trades. Fran, another one that did the best friend signal, doji gap up. Notice what it's done over the last few days, even with the market going the other direction. AK, yes, this is being recorded. They're always recorded. SRI. This is where you observe the obvious. There's one of our 12 major signals, a Morningstar signal. Now you have a doji gap up breaking out through this area. Just logically, what does that tell you? That there's a whole new dynamic in this investor sentiment based upon a candlestick breakout. Yes, that's the whole point of this, Lisa, is this whole, or that, I guess we've got it advertised as a 4-hour training. We'll be lucky to get out of there in less than 6 hours. But that's the whole point of this, is to start learning how to recognize the patterns. These aren't for me to recognize and let you know what they are. This is to teach people how to recognize those patterns so that no matter what you're trading, I mean, I might not be trading the $2 stock level, or $2 stocks. I might not be trading the $600 stocks. So if somebody's doing their own analysis, they want to be able to recognize the chart patterns that they can recognize and utilize. So again, you won't have to learn all 14 or become an expert. If you just become an expert or really learn how to control 2 or 3, you're going to still have more trades than you'll ever be able to handle. Yes, CBL was a nice J-hook pattern. Actually, a bobble breakout. And I've got this down in the bobble. That's in the first one. So we've seen quite a few of these bobbles. Notice where Musa bobbled, right here at the 200. What's it done once it broke out? So the bobble pattern is a J-hook pattern that is much more defined. Hain also has done a bobble breakout. It backed off yesterday, but notice what it did today. Again, this is kind of the follow-through of a J-hook pattern and or a bobble pattern. Even though we had a down day yesterday, they were buying today, again, based upon that's what the strength of that pattern should be telling you. So even if you find ones where you might not put them into the real lively category, like Hertz. Hertz did a bobble breakout. So the probabilities are pretty strong that it's going to be going higher. Might not be a big percentage move on a stock purchase, but you might do a spread of some sort where moving from here to here, which is only a, what would that be? About a 4% move, might be a 50% move if you set up the right strategy, spread strategy. Where to find a J-hook screener? Ron, I think somebody in here, if you ask that during the day, somebody probably has the formula for a J-hook. But fortunately for a J-hook, you don't need very much screening. You're going to find them based upon usually just scanning for simple signals, which is what's creating the next part of a J-hook pattern. So there's your bobble breakout on Party City. And what is the result? A bobble is a price, yes, that hits a resistance level and usually comes back quite often to the T-line, won't close below the T-line or the T-line is effective, and then comes back up through the resistance level. When it comes up through that second time, you know you've got an extremely strong probability you're going to be in a good price move. Big price moves, you learn to recognize the 45 degree. There's our Morningstar signal. There's our J-hook pattern breakout. There's our 45 degree starting. The resistance can be any moving average that you can see. As long as you can see there's a resistance level. Would you short a bobble like Hertz that falls, fails? Oh, we don't know. We don't know what's going to happen when it gets to the 200. Whoops. We don't know what's going to happen once it gets to the 200. It might go sideways. It might go right through and come up to this level. So we can't make that assessment or that, make that judgment. All we're looking at right now is what the prospects are that it's going to this level. Once we get there, because of the visual information built into candlestick signals, we'll see with much more clarity what's happening there. Bill, you're still making the assumption that once it hits the 200, it's going to sell off. We have no idea. And if it does, it may just be a little pullback before going up. So you're trying to make an assessment on a stock that's moving toward a resistance level that hasn't even gotten there yet. So no, you don't make any predetermined notions of what's happening when before it gets there. That's a J-hook pattern setup for lows. And let's see, Home Depot, same scenario, kind of a J-hook pattern setup. So if you see both Lowe's and Home Depot setting up the same way, you have to assume that somebody out there major is buying those stocks. So part of our analysis is going to be which signals are the strongest. Now this one has not as much clarity. It was actually more of a kicker signal on Nugget, starting your downtrend. But knowing that the kicker signal, this is our trend kicker signal on Tesla, before it started its strong uptrend, which was also part of that fry pan bottom breakout. So knowing what should occur after a trend kicker signal, this gives you that more an advantage of being prepared to get into a trade. Kicker signal on BAK, implying there's more upside. And Cuervo. Somewhere there was a kicker signal. Well, it may have been your best friend signal starting that move. And this is what we look for also. Is when we start seeing buy signals and then a breakout through this channel, or some people call it a flag, it tells you there's a new dynamic. You're probably going to get more upside. So what we're looking at here is, look at our kind of our bobble breakout. There's our 45 degree. We know the simple rules of the different patterns. How long do you hang on to a 45 degree? Until you see a sell signal and a close back below the T-line. BAK had a bullish engulfing. Well, that's right here. There's the kicker signal. They opened it here, closed it here. The next day they gapped it up above the open and went the opposite direction. Would I short? No, not necessarily. All you have is selling. You have a dark cloud. You can short it on weakness, but it may not be your it may not be your best short. I've got shorts in here that are a lot more compelling. Oh, pshaw. What's happening here? Now that's much more compelling. That's a bearish kicker signal on BCRX. So what's the kicker signal tell us? On the bullish side, lots of force to the upside. On the bearish side, lots of force to the downside. Abdul, yes. The weekend will be recorded. So the only, if you go ahead and purchase the weekend, when you get back, you just have Abe, or Abe will email you the lesson of the session. Now remember, if you miss a session, it's no big deal. Get the recording. The only difference will be is that if you have a question in the session, you can ask it right there. If you look at the recording and you have a question, you just have to wait until you come into the chat room, and you can just say, Steve, XYZ looked like it was doing such and such on the chart. What should we be looking at? We'll just answer it later. World Wrestling. There's your slow curve J-hook pattern. There's your big gap up, 45 degrees. So a 45 degree is just a breakout, and then it stays like a steady eddy above the T-line. A J-hook pattern has a strong move to the upside, and then this little pullback, and then the next move. Foot Locker is setting up, but it needs confirmation. It needs to get up above the T-line. All right, what else do we got here? I went through those. Oh, the shorts. So the opposite of a fry pan bottom is a dumpling top. And what tells you there's force on a short, this short? Look what you had right here, kind of your bearish best friend. They couldn't hold here. Where's your next likely target? Down to the 200-day moving average. So the signals and patterns, we recommended shorting this one because of the dumpling top the other day, still short. Where's our first likely target? Right here. Why is that a logical target? Your stochastics is starting to get to the oversold area right about the time that it hits that level. Paulette, I usually don't buy options 2 to 3 months out. If I was buying the monthly calls right now, it would be the Julys. If I think the market's only going to have a quick move one way or the other, I might go to the weeklies. But I'm less likely to trade the weeklies only because of my time constraints. If I could sit here and trade aggressively, I might do more weeklies. But because I have so much stuff going on during the day, that if I'm not paying attention to my weeklies, they get away from me. So I'm better off being out in a monthly. But I don't go 2 or 3 months out, because what does the candlestick signals and patterns tell you is things are happening. Telling you they're happening right now. So the closer, obviously, to your expiration date, the higher the probability or the bigger the returns are going to be. Yeah, weeklies are, again, depending on your risk factors of how far out you want to go. After J-hook, those next few days of a pullback, profit taking, it's easy to get wicked out if your stop is too close. Exactly. But remember, if you have a stop at a place that you sat and logically said, the price should not come back down through this level, then you should be able to see that if it comes down, stops you out, and then turns around and heads back up, you can always buy back. Now, I say that not to be glib or anything, but I've discovered that probably 80% of the time, if I've gotten stopped out and they start it back up, even though I have to buy it back at a higher price, I'm going to make money with that trade because it's still doing what I initially thought it should be doing. And that stop out could have been an announcement that was just a knee-jerk reaction, a major institution selling their position, and when it was done, it headed right back up. So there's lots of times I'll get stopped out, but then if I look at the chart later and it's heading back in the direction I thought it should be going, I can always buy back. With J-hook breakout, again, AK, that's all up to each individual's risk-reward tolerance. If I was buying puts on this, knowing that it's starting to break down and it opened lower, I know the force of a dumpling top is pretty strong. I might buy a short weekly, meaning 2 weeks out. If I was buying something that looked more like this, it was going to be kind of a steady uptrend, I might do a spread, or I might do something 3 or 4 weeks out. Okay, let me let's see, what about? So LCI was because of the dumpling top rolling over. ZTO. Again, notice you could see there was a resistance level, and then what happened when it got here? They gapped it down, and then what did it do today? It did a bearish doji sandwich, basically filled this gap, but your stochastics are still heading down, so where's your next likely target? Back here to the 50-day moving average. Now this is where a lot of people say, well, do you use Fibonacci numbers? I don't as a primary indicator, but I will throw them on here because if I'm looking to see how far they're going to pull this back, I just throw this on here because if I see a buy signal here, or a buy signal here, or a buy signal here, I know that's the Fibonacci number that people are starting to buy That's why I saw a reversal signal at that level. Will you have a spread setup session? Yes, we have that every few weeks. If you buy 20 trading days, but you will get most of the run most of the time. If you buy 20 trading days out, you will get, yes. Yeah. And again, it's what you think your risk reward is going to be. If you think that it's going to pop right now, you might do 2 weeks out. If you think it's going to be a longer term run or a longer time frame, you might go out to the first monthly. Rick, that's kind of Fibonacci. I put the T line with Fibonacci characteristics. Fibonacci characteristics are just kind of a natural support and resistance level. The numbers that Fibonacci came up with was 38.2. 50% is not a Fibonacci number. It just works effectively. But the other Fibonacci number is a 61 level. But those are in nature. I think if you, one thing that I read, that if you measure the angle of the veins in a leaf, they're 38% and 61%. Okay, let me see what else I got here. Oh, so when you see something running hot, like we saw in GIVO, this is where, when it starts going from 5 to 25 in the matter of 2 days, that's very simple. You can start utilizing your 10-minute chart or even get down to your 5-minute chart. And to use the same criteria. If you see a big doji up here, where's your safety stop if you're trading this? It shouldn't trade back below the low of that doji. So these are just kind of simple rules. This one, there's your island reversal. Hammer doji, bullish confirmation. But it didn't confirm today. It needed open positive and start trading positive. It closed back below the T line. So what's this tell us about getting into this trade? We don't want to get in it yet until we see a buy signal and a close above the T line. Yes, that's kind of the natural support and resistance is the Fibonacci numbers. That's why so many people watch them. But we're not using them for, let's just throw them on here for, we don't use them for our trading strategy. We use them to see where is the price coming back, and if they kind of coincide with a Fibonacci retracement and a candlestick reversal signal, that's pretty much telling us that's where people were buying again. Oops, I didn't do the biggies. Oops, and I didn't do that right. Amazon. You can see that slow curve breakout. You can see the J-hook pattern. Now what do you have? You've got a big bearish engulfing signal. Where do most people buy? They buy exuberantly at the top. If you see a gap up in the overbought condition, remember our number one rule. Start looking for a sell signal. NVIDIA, not in good shape. You're probably now in a trend channel, so I probably wouldn't be long or short this one right now just because of the lack of identifying where it could move to. And you've got Tesla that looks pretty ugly with it closing back below the T line. Where's a likely support? Remember, if they go through a resistance level, they may come back and test it to see if it's going to act as support. And Apple, as you can see, once it did the bearish engulfing signal, look at your hanging man gap down. What did that tell you about the seller's force? That the sellers were in there with good control. Then a few days later, they did a bearish engulfing. Who do you think's winning the battle? The bears. They still haven't been able to close this back up above the T-line. So where do you think the next likely target is? Probably the 50-day moving average. Joe, it's not the biggies seem to follow. It's usually the biggies that are probably affecting the markets. Now Netflix, this is where we put on a strategy, and this is why I tell people, if you're putting on a spread, I usually keep my spreads anywhere from 2 to 3 weeks out. I don't try to go any longer than that. The reason for that is, if you do a spread 4 weeks out and it starts moving very strong, which do you think is going to move a bigger percentage? Your higher priced one. So in this case where I bought the 385s and sold the 395s for $3.10, but if it moved up above the 395, I'd have that, it would, the 310 would go to $10. But even though it's way up here, the premium on the 395s are still bigger than the 385s, so they're only trading at 8.5, even though we're way above the strike prices. Can you show Netflix with 10-minute chart in today's open and reversals? Do you dance around the third Friday? Oh, no, usually trying to find 4-leaf clovers. The 10-minute chart on this one, it's the 1 minute, the 5 minute. What do we need to look at, Paul? They sold it off, they brought it right back up to about even and traded off a little bit. Oh, well, the spread on Netflix is we're still less than a week away. I think I've got the June 29th spread. But if this stock trades anywhere up here, as long as it stays above 395, the closer we get to expiration, even if it trades down another 15 points back to 400, it's still going to go up in price the further we get to expiration, because those premiums will start equaling out. Rick, that's what I tell people. No matter what trading strategy you want to use candlesticks with it to tell you exactly what's going on at the levels that you're watching. Which was surprising. I don't know what I mentioned earlier. Last weekend I was in Chicago talking at the Chicago Board of Options Exchange to a group of investors and listening to other speakers that trade options. And I was definitely surprised at the number of people that don't use candlesticks. And I'd look at their charts that they're explaining and why they put on a position, and they're just looking at the chart, not taking into account what the candlestick charts are telling you. You just get so much more information using the candlestick signals. Yeah, they try to sell you custom indicators, but that's fine. So I tell people, if you're using somebody's indicators, but if you throw candlesticks on top of that, you're going to see much more clearly what's happening. This is Labu. I don't know why I got all these lines on here. But you can see the J-hook pattern breakout. But you can also see what happened today, kind of a big bearish engulfing. Yeah, a lot of people use MACD. The only problem with MACD, it's a kind of a lagging indicator. So, all right. Anyways, we recommended CWH today because of a very simple pattern. The best friend signal bouncing up off the 50, making the next logical target up here at the 200. Now, will it get there? Who knows? May do a J-hook pattern to get there, but at least we know we're heading in the right direction, and probably with more price movement than just a regular uptrending stock and or not even an uptrending stock in this market. We recommended Crone for the very simple reason we had a doji gap up through the T-line. And what's our simple rule of a doji? It's going to move in the direction of how they open after a doji. So if they did that, we had kind of a bullish doji sandwich setting up and kind of confirming a J-hook pattern. So knowing what each individual signal is telling us can help us identify what pattern is setting up. We're still short OLED. I covered the calls the other day, but I actually covered the calls here. But you can stay short on this on the stock because look where it's trading. It closed below the support level over here. You might still have a lot more downside. And NTLA was another one that was coming out of that J-hook pattern. Sold off today, but not a sell signal. And look where it closed. Right at the 3T line. So we still have a very simple analysis or strategy. If it opens lower tomorrow, where's it likely going to? Back to the T line. If it opens higher, telling us the 3T line's holding up. So, Becky, do we have the link for this weekend? That is not a dark cloud, John. That's why we tell people to make sure they know the signals. What signal is this right here? Anybody? There you go, Marshall. Thank you. That's nothing. That's a down day and an uptrend. No. JP, and an engulfing signal opens above the previous day's close and closes below the previous day's open. It's not a dark cloud because a dark cloud needs to open above any of the trading of the previous day. So this is just a down day and an uptrend. You give it a lot less, there you go, John, yes. The dark cloud has to open above the high of the previous day and then close more than halfway down this candle. Becky, are you there? Do you have the link for the weekend? If not, again, the reason I recommend doing the patterns is because, there you go, thank you. If you can see, and I'm supposed to mention that if you're not a member, the training session is like, what is it, $270 more than the member's price. So as an enticement, we just say join as a member and then pay the member fee and you'll save $170. PC2000 is one of the scanning softwares. So because we can identify much more clearly when the markets are selling off If there's one index going up and the other index going down, that means they're just shifting funds. But when they all start moving in the same direction, again, like the NASDAQ showing us a bearish engulfing with the other indexes heading down, that's pretty much telling us it's time to take some profits that everybody is selling. Again, if Sylvain, he'll get back to you. We'll make sure everybody. And if you're a member that has taken the top patterns training before, you come back in for free every time we do it. I often asked people when I was in Houston, I would do trainings for the Houston Investment Club and the Houston Forex Club, and there'd be people that come and watch the sessions that I did 6, 8, 10 times, and I'd always ask them, why the heck do you keep coming back? It's the same stuff. And their answer was, every time they saw the session, something else clicked in, that they recognized what was happening and got clarity more on what the signals were telling us. No, Rick, unfortunately, that session usually gets sold out, and it's an expensive accommodations up there. They just wanted to see if you told new jokes. That's right. And unfortunately, I probably disappointed them time after time. All right, so is there any general questions on candlesticks? Yes. For those of you, Cuca Lake is, if you want to do a private training session, I call them private training sessions. That's when we have maybe 4 or 5 people. You sit in front of the computer with me for 2.5 days, solid. But our breaks are that we can go out on the deck overlooking the water, or if it's real hot, we can go splash in the water. But you don't have to bring anything except if you want to trade, you bring your laptop and bring your bathing suit and flip-flops. And we take care of all the food. Everybody's rooms are right there at the house. And we've got, it's the type of thing that if you're very serious about trading, this fills in all the gaps as far as the questions or the questions you have about your own trading. And the point of it is, unlike us doing a session for a weekend online where if you ask a question because you're confused about something, you may only get a one-line answer. Up there, we go into it in depth for 15, 20 minutes, and then we can orient the rest of the charts we're looking at on that basis. Yeah, and the food is good, and there's 58 wineries, so there's some nights where we just sip wine watching the moon come up over the lake. Okay, I guess any questions in regards to candlesticks in general? What is the best use of patterns for intraday candlestick versus T-line rather than end of day? The patterns are pretty much the same. If I'm trading intraday, I'm trying to think of what I did today. This is the crude oil. So first analyze what's happening on a daily basis, and then you still can trade off the patterns on a 10-minute basis, or I do. The market is starting to roll over. Yes, we see the Dow's been down, and the NASDAQ is right now giving us a sell signal. Oh, you probably want to see both of them. Lows, want to see strong buying. Now, you got two places to buy. You can buy tomorrow if it trades higher, anticipating that it's coming up to test this level, or more conservatively, you wait for it to come up through that level. Same scenario with Home Depot. You can buy on positive trading, anticipating that it's going to break through this area, but because you're so close, I would rather just wait to see if it's going to break through, give up a little bit, but definitely increase your probabilities. What is the word you use? It's called fractal, yes. Where no matter what time frame you're looking at, they all look exactly the same. Milton, not necessarily. If I think the market is probably heading down, tonight I'll put out probably 2 long picks and probably 2 short picks. Because if the market opens lower, that's a pretty good indication things are selling off. So, oh, that one's already moved. But somebody pointed out Xerox today. Notice how it has kind of a little J-hook pattern, so it might start shorting this one. In the members area, if you're a member, just go to stock picks. And then we also have, if you're members of the option room, we've got called WOE, W-O-E, that we put out usually option picks every few days. Let's see, NTLA. Yes. Now, to buy back, who was saying that one? Marshall. To buy back, you've got to decide whether this is the best place to have your money, or when you stopped out and hopefully with some profits, that to get back in, is this worthwhile? It may not be the best place. You probably should be looking for a chart that looks more like this somewhere. Xerox has a kicker. Over here is kind of a kicker, but no, this is a bearish engulfing and then a failure, kind of a J-hook pattern. Are you planning to have public sessions? Public sessions. I don't know what that means. We're trying to get some speakers to come in. Like Bill Johnson, and Pat's working on a few other people. Yes, if you were going to buy, it would have to probably come back up through today's open on whatever we were just looking at. Oh, NTLA. Yeah, I try to put out the picks. Depending on how much energy I have, they could come out anywhere from 5 o'clock to midnight the previous day. Okay, I guess with that, again, this weekend, it's probably going to be about a 6-hour training, but it puts the profitable patterns in kind of a quantitative order. And then hopefully at the end of the session, you've got 2 or 3 or 4 that you really can recognize. And then if you become a master of those, first of all, your whole concept or your whole perspective of the right things to do and the wrong things to do in your trading will become much more clarified, and it will definitely take your emotions out of your trading. And that's the kind of the big basis of how or why I use candlesticks. Is before I came across candlesticks, I was one of the worst investors in the world. Everything I did was on emotions, which is exactly what the graphics of candlesticks tell you is what's happening normally from human nature. Bob, we start at 9:30. We usually try to close out around 1 or 1:30, but I keep adding more and more information, so more like 2:30, 3 o'clock will be the closing time. Okay, I guess with that, Jim, go ahead and do the double line. And then 4.2 seconds, do the next double line. Okay. Oops. Our RTS, that's a J-hook pattern setup. Notice you did the Morningstar signal right there at the 50-day moving average. You can buy this one on positive trading tomorrow. Just use the T-line, which is also equivalent to the halfway point of today's candle, as your stop. Hershey, I wouldn't short this one. Not unless it has a big, huge gap down for some reason. It's just not a directional chart at this point. You don't know whether it's going up, down, or sideways. Let's see, the US dollar. Well, shucks. What the heck? What is this? September. All right. There's a bearish engulfing signal. You're still above the T-line. You can see you're in a J-hook pattern, so you stay long as it stays above the T-line. But if it starts trading lower, yeah, you probably want to start going short. Whiting, trying to get back up through the T-line. Notice the bullish engulfing right off the 50, back up to the T-line. Makes it very simple, though. Tomorrow, if it opens positive after a doji, more than likely it's going to go positive. If it opens lower, you don't want to be in it. MUX, nothing there of any great consequence. That's kind of it's just not a very good tradable chart. Microchip, want to go short on weakness. There's a big bearish left-right combo today. A doji followed by a bearish engulfing. Yes. Whoops, didn't read far enough, Ralph. Yes, you can go short on weakness. Oh, for crying out loud, I must not be doing things right tonight. PPR. I don't know why that's an invalid chart. PPR. That's a nice little gap up. If you're buying this one on strength, on positive trading, don't let it close back below today's open. RYTM is kind of a little island reversal. You can be buying this one on positive trading. Kind of your scoop type pattern, but the island reversal is the relevant factor. INXN, nothing of any excitement there. If you like it, your first target is going to be right here, and that's not a very big percentage move. I'd probably be trading something else. AVEO, this is a perfect example of, if this was your fry pan bottom, what's your expectation to move like this? What happens when you see a bearish engulfing, especially right at a resistance level? It didn't break out, you should be back out of this trade. COTY. All you can do on this one is stay long as you stay above the T line, but notice your stochastics are running out of steam. Keep your safety stop below the T line. And YRCW, another one that has to trade positive tomorrow to maintain the uptrend. If it opens lower, you probably want to be out of it because it's not only will it be below the T line, but you've lost your trajectory. Dick's Sporting Good also has to, I wouldn't be long or short on this one right now. You need to see more bullish confirmation, getting it back up above the T line. And ETP, nothing of any great consequence here. It's stuck between the 50 and the T line, and it's moving sideways. Another one I'd be someplace else. And HRTX, big gap up. You stay long on this one. On positive trading tomorrow, use today's low as your stop. AARK is not working. Square backed off a little bit today, but notice it's not a sell signal. It didn't open above yesterday's high, and it's still trading above the 3T line. You stay long, but if it opens lower tomorrow, assume that it's coming back to test the T line. Walgreens, you can stay long. Which Walgreen stock is going on the New York or the Dow? One of them. Amazon did a left-right combo. It has to open positive and trade positive to stay in it. Siri, gap down. Notice your kicker type signal here. I think that's a kicker signal. I'm colorblind. I think that's a green candle. When they gap it down, get ready to close it out. Definitely would have closed it out here, and now your likely target is back to the 50-day moving average. Tiva, stay long as it stays above the T line, but have a safety stop just below the T line. If it comes down there, they're selling it. There's a J-hook pattern working. You're in the overbought area. There's no sell signal, so put your safety stop at today's open. Stay long until you see a sell signal. CAJ, stay short. HMTV, getting a little bit toppy. Put your stop just below this spinning top's low. If it comes down through there, they're obviously coming back toward the T line. The semiconductors, big bearish engulfing. Looks like they're starting to sell that sector off. Red Hat, notice the kicker signal starting the forceful downtrend. I would think the first level to watch is this one right here. So if you're short, you stay short. Crude oil. Oh, yeah, the oil fund. Yeah, it's not going anywhere. Crude oil right now is trading back up. Matter of fact, while we were talking, I caught this move and made a good profit. Caught this move on the way down and made a good profit. That's the 10-minute chart right now, Jay. This is the daily. That's telling you there's some strength coming back in. I don't think this one's going to come up. Nope. And DFFN, nothing. Wouldn't be long or short on this one. There's just absolutely no direction. AARKW. ARKW. No. AQQW. KCA. Oh boy, getting a little bit toppy. Have your safety stop down here. If it comes in that direction, they're coming back to test the T line. MNK backed off a little bit today, right where you expected it to go, to the T line after your shooting star. So when it opened lower today, that was your expected target. So remember, if you see a doji shooting star in the overbought area, if it opens lower, it's going to sell off, and then you can calculate where it's going to. ENDM. Stay long. Use the T-line as your stop. MasterCard. Oh boy. This is a toughie to trade. If you're long, you stay long. Don't let it close below the T-line. If you're looking to buy, I'd buy it when it broke out through this level. And LRCX. That's not good. Notice when they hit the T-line, they sold off. If you had bought it, at this point, I would have covered the short. I wouldn't be a buyer of it until it gets back up above the T-line. Micron, still caught in this downward channel. I wouldn't be long or short Micron right now. This one, you can stay long, anticipating a 45 degrees, so put your safety stop right here. If it comes down through that level, your 45 degree has disappeared. And Cree should be short, yes. All right, we did crude oil. WTI, that was a failure. You had kind of your fry pan bottom. The fact that they took it back down through the trajectory of the fry pan bottom told you should have closed it out today. So I would not be long. ACLX not coming up. Let's see, we did SMH, that one big bearish engulfing. ACLS. You can buy this one, but observe the obvious. Got a lot of resistance here. So if you're buying, it needs to break through probably at least the 34. Okay, WBA is the one that they're replacing. Okay. GE. HRTX. Oh, how do I do that? HRTX. It will be if it opens positive. If it starts trading lower, you want to take profits and wait for the buying to start again. ARG. There's a J-hook pattern. Now you want to make sure it should get through the 200, because if wave 3 or wave 1 is the same as wave 3, it should go right through. XL. Having a hard time getting through the 50. So this is where you observe the obvious. If they open this lower, you come out of it. Look for a bobble pattern setup. Red Hat dropped. Let's take a gander over here. I don't see it yet. Oh, they announced a stock repurchase program after hours. Chesapeake. Having a hard time getting through this level. If you own it, it has to open positive and trade positive. If it opens lower, you're still caught in this sideways. I'd go someplace else. ETGT, another bearish engulfing signal. This has to open positive tomorrow to stay in it. Oh, I was trading it off the 10-minute charts, knowing that they I was just trading this where you had an evening star and then they broke it down. So usually when I'm trading and I see the 10-minute starting to move, I'll flip to my 5-minute. And the 5-minute was doing sell signals. So if I have a big move like this, I take profits on the first signs of buying. That usually is an indication that's where the bulls are stepping in. So this one I was buying because it was supporting right here off the 50. It broke out and then closed it out up here after about 20 minutes, because that is probably the area that they've picked. So usually what happens is if I see something like this, I'll close it out and then I'll put a buy stop right above the high, because the probability say if they come up through there, they're going into the next wave. But more than likely, they're going to do a drift like this because they've finally reached the level where the bulls and the bears are in equilibrium. KRE, that's nothing. It's sideways. I'd be someplace else. There, we finally got it. But once again, notice what happened here. Where do most people buy? They buy exuberantly at the top. If you see a gap up in the overbought condition, what's the first thing you start looking for? Is a sell signal. Tandem, it's up $4. All right, so it's up in this range. If it was earnings, fine. Watch for a 45 degree after that. If it's just exuberance, get ready to take profits. Fitbit. Oh, Rick, I just do those trades just if I'm sitting here doing picks or other stuff. This keeps the blood running a little bit. Fitbit did a bearish engulfing signal. Another one that tells you if they open it lower, you want to be out of it. Or at least you don't want to be long. And G-Pro, you stay long as it stays above the T-line. AMAT, another one that tried to get up above the T-line and failed. So you don't want to be long or short this one right now. Nothing that give you any handle of which way. ALGN, if this opens lower, put your Fibonacci retracement number on here. AMD finally closed below the T-line. How long do you hold on to a position? You better type it right to get right. You stay long. Notice the kicker type signal. Stay long until you see a sell signal. There's your bearish Harami, closed below the T-line. Another one you can put your Fibonacci numbers on. Yeah, that one's backing off, Red Hat. The bonds, nothing. You're in a wedge moving sideways, which basically tells us The interest rates aren't going to do much of anything right now. Jenko, there you go. Yeah, this isn't rocket science. I keep telling people that this is merely identifying what happens normally in human nature. And once you understand or recognize those signals and patterns, you're going to be way ahead as far as keeping your emotions out of your trading and putting your money in situations where the profitability is greatly in your favor. Okay, so with that, everybody have a good evening. If the NASDAQ is up, does it negate today's bearish candle? It needs to be up and stay up. It has to close, open, and stay above the T line. If it opens and trades up above the T line and then comes back down through today's open, that means they're selling it off, selling the markets off. All right, everybody, we'll see you bright and early in the chat rooms tomorrow. Oh, Becky, you want to put the link in one more time? Get a couple people private mission. There you go. All right, it's well worth your money. Let's put it this way. If I had me back when I needed me, I would have started making money at a lot younger age, even though I'm only about 36 or 37. All right, everybody, have a good evening.